Good morning, everybody. Today we're going to be talking about fixed assets in Dynamics NAV. I'm going to be showing 2018 version. So there might be some features here that you'll see that aren't available if you are not on a more current version of NAV. This is going to also be just a high-level overview as I started to put together the webinar. Just to take a deeper dive would have taken much longer than a half an hour. So next month, I hope you tune back in. At the end of the slide deck, I'm going to have a list of topics that we're going to be covering in a little bit more detail related to fixed asset for our August webinar. Let's get started. So as Clayton said, I'm Danica Pelgrim with Intellis Solutions. Here is our website, my email address, and my phone number. Best way to reach me is by email if you have any further questions or comments. Here is our agenda today. First, I'm going to start talking about the high-level setup areas that we need to look at before we can start creating our fixed asset and then booking entries. I'm just going to, again, like I said, talk about some high-level ways of booking entries and the most common ones that that are done on a day-to-day basis. And then I'm just going to cover the book value report today. That seems to be the one go-to report that I recommend to people and the one that seems to have the most information. And we'll take a look at some other reports in a little bit more detail in next month's webinar. So let's get into fixed asset setup. So if I go into NAV and I do a search on FA setup, we'll get into this screen right here. There's really not a whole lot on this specific screen that requires setup. The first one is a default depreciation book. I'll talk a little bit more about that in just a second. And then just like in other areas of NAV where we can define allow posting to from dates, this is just to manage when people can post transactions to make sure that people don't post into closed periods or go too far out into invalid periods or periods out into the future. You would use that more if you have large accounting staffs and you just need to manage the periods that they can post to. I'm going to talk about main assets and components a little bit more next month. And here, just like in a lot of setup areas and master record setups, we want to define a number series here. And what this does is it automates or increments fixed asset numbers every time a new fixed asset number is set up. And next month, we're going to talk a little bit more about the insurance numbers. So as you can see here, as NAV has evolved, they've made it a little bit more efficient. You can see a lot of the other setup areas right here on this fixed asset setup card. But let's take a look at what some of those are involved. The depreciation book, you can have multiple depreciation books on any fixed asset. There's going to always be one that needs to post to the general ledger. I shouldn't say it needs to, but typically there is one that posts to the general ledger. In the fixed asset module, this is the only one in NAV where you can turn off integrations to the general ledger, and that's really kind of a nice feature because I find that a lot of our clients don't necessarily set up fixed assets when they first transition to NAV. So you can set up all the beginning balances in just a regular fixed asset journal, and it won't integrate to the general ledger when you're initially doing the posting and setting up the beginning balances. And then when you have all of your beginning balances set up in your subsidiary ledger, then you can turn on this integration. And then any transactions after these boxes are all checked are posted would fully integrate to the general ledger. And that's how you're going to keep your general ledger and your subsidiary ledger in balance. Some of these other settings here, again, these are just very standard settings that I typically find that I don't have to change. I'll talk about a couple of these, again, in a little bit more detail, but what you see here is very standard settings. Another example of a different type of a book that you might want to set up is one that might be for state or federal or tax accounting purposes, where you might want to have a different depreciation method on the book. And again, that's just one more piece of information that I'm going to get into a little bit more next month. But here we're just going to deal with the primary company book that you would post to assign to your fixed asset and post to the general ledger. Right on your depreciation book, you're also going to be setting up journals. These are the default journals that transactions would go to. Whether you're doing acquisitions, disposals, or doing your calculate depreciation. A nice thing here is if you leave the user ID blank, The same default journals would be used for everybody. If you have a very large accounting staff and have multiple people that you want to set up different batches for, you can specify different batches that you want specific users to go to, and in that case, you would just set up the user ID, and whatever batches are filled in here and templates would be the batches and templates that the transactions would go to for that specific user. Your fixed asset posting groups, what this does is, this is a mandatory field on all of your fixed assets, just like on other master records in NAV. What the fixed asset posting group does, or the posting groups in general, when you assign that to a specific fixed asset record, it drives all the different GL account numbers that your different types of transactions will post to. So if I get a piece of equipment like machinery, and whether I use the calculate depreciation function, or use that fixed asset in a type of journal, or in a purchase invoice or a sales invoice, this defines all of the GL accounts where all the different types of transactions go to. If you don't have a fixed asset posting group assigned to a fixed asset, you will get errors because the system won't know where to post all of the transactions, the GL account. Or if you're doing a type of transaction and you have that account blank, you'll also get an error message, and usually it'll tell you the GL account or the field that's missing here. So they're usually pretty intuitive messages. Two other areas that can give you a little bit more detailed information as far as reporting is concerned are fixed asset classes and subclasses. Now, these are not mandatory fields, but just good for information. A little bit more, let me just jump back to the fixed asset posting groups for just a moment, because another important thing here, the way I generally recommend, and this is not a mandatory way of doing things, your fixed asset posting groups, you might want to have a fixed asset posting group for each class of assets that you have on your balance sheet. This makes the report that I'm going to show later on today very easy to use, where you can look at that at the end of each period. And there's a lot of good information in there that your auditors or accountants like to see in order to make sure that your subsidiary ledger ties to the general ledger. Now, it's not mandatory that your posting groups have a one-to-one relationship to everything that posts in the general ledger, but that is the easiest way that I find. But then you do have these classes and subclasses that you can also use to group and categorize your fixed assets. So if your posting groups don't have that one-to-one relationship to the fixed asset accounts to the general ledger, you can set up your classes. Again, this is just sample data. You can use different methodologies to do this. And then you can see on your subclasses here too, where, like if you have equipment, you might, or even automobiles, it could be, you break it down a little further, whether it's a car, a truck, a trailer, whether it's a copier, desk, chair, whatever. And then you can put in the fixed asset class code that you're defining here, and then also have default posting groups. So the advantage of actually drilling down into the subclass area is this also defines a few more defaults when you pick your subclass, which will streamline your data entry when you're setting up a new fixed asset. So after all of those other components are set up, now you can get into setting up your fixed asset record. Here, in the introduction of NAV 2017, and here I'm showing 2018, this acquire wizard surfaced, which makes recording the cost of the fixed asset a little bit more streamlined. And when we go into NAV, I'll show you that in just a moment. In order for this acquire button to pop up or be available, the information that you need to have filled in is the description, the subclass code, depreciation book, posting, and the start date and years. If you don't want to use all of those fields, specifically your class code and the subclass, that's fine. I'm also going to talk about in a little while how you can put the cost of your fixed asset on that asset by virtue of either a fixed asset GL journal or a purchase invoice. At this point, though, let's go into NAV and take a look at some of the things that we had talked about, just so that you can see them firsthand. Just like we showed in the screenshot, I'm going to first go into fixed asset. Now, for the fixed asset module, one thing that's a little unique is, instead of spelling out fixed asset to a lot of the setup areas or the things you're trying to find in the fixed asset, just type in FA for fixed asset, and I'm going to go to FA setup. And this is the screen that you had seen in the slide deck that should look very familiar, where I can get, once I set up my number series and the default book, all of my other setup areas are right here. So let me just go into the depreciation book like we had seen before. And here you can see there are two here. I'm going to talk a little bit more about the state one in next month's webinar. If I go into edit here, you can see a lot of the same things that you had seen in my slide deck there. And these buttons here, these can be turned on and off at any time. But once you have all of your fixed assets set up and everything ties out to your subsidiary ledger on the primary book that posts to your general ledger, I recommend that these don't be changed. Just leave them as is. On each one of your depreciation books, this is where I had indicated where you can find your journal setup. And this is where you would define the default templates on this depreciation book where you want your transactions to default to. And if you have several users set up, you can come in here and set up a specific journal for a specific user. But I'm just going to leave this as is for right now. Right here from your FA setup screen, you could also get directly to your classes and set any additional classes up that you want here. And this is where you could also see subclasses that we had talked about and the defaults that are here. And this, if I just drill down here, you can see that this matches that same list that I had shown earlier of my classes. And here's a list of all my default posting groups here. Now, if I want to look at my fixed asset posting groups, again, this is kind of one-stop shopping right here. I can go into my fixed asset posting groups. And if you start adding additional posting groups or want to set up additional ones in the future, you can just continue adding them here and all of the respective GL accounts that that particular fixed asset would get posted to. All of these, you don't necessarily need to go into the fixed asset setup to find all of these. If I just go continue typing in a search for fixed asset setup, if I click my option on the right-hand side here to go to setup, here you can find all those same areas individually as opposed to finding them on the menu in the fixed asset screen. So now I'm just going to go to my fixed asset list and just set up a sample fixed asset here. So since I'm automating and incrementing my fixed assets, I don't have to type in a new fixed asset. So let's just say I want to buy a new pickup truck. Of course, you would probably be a little bit more descriptive in what you want to put in here. I'm just going to go directly down to my fixed asset subclass code because this is where I had all of those defaults set up, and I'm just going to pick vehicle. And when I tab through that field, you can see that a lot of my class code came in here, my depreciation book, my posting group. Let me expand this. The other thing that you would need to fill out is your depreciation start date. I'm just going to put my work date, which is 1/31/19, a little bit out into the future. And then you can pick your different depreciation method, whatever the case may be. And I believe the standard depreciation years for vehicles is 5 years. And when I put in 5 years here, it automatically fills in my depreciation end date. Now, on my screen that I had shown you before, I've met all the criteria in order for my acquire field to pop up here. But let me put this aside here, and let's go back into my slide deck, and we'll start talking about the different types of fixed asset entries. The very first fixed asset entry that needs to be posted is your acquisition cost. Now let's step through what this wizard does for you. So here's the very first screen that you'll see. Welcome to the fixed asset wizard. We're going to go ahead and book the acquisition cost, and you would just hit next. The next screen that pulls up here, you want to put in the full acquisition cost of the invoice that you, or the document, or whatever the value of the vehicle is that you want to post in the balance sheet. Enter your fixed asset acquisition date, and then hit next. And then the next screen that pulls up, in this particular example, I'm going to be posting it to a vendor. Pick your vendor number that you want it to go to. This external document number would be the AP invoice number that your vendor assigned to it. And then when you hit next, the next window opens up and it gives you the option to check this box. When you finish, If you check that box, it's going to open up your fixed asset GL journal. Now keep in mind here, we're using a book that's fully integrated with the general ledger at this point. So anything that we post going forward, we want it to go to the subsidiary ledger and general ledger. So that's why this is a fixed asset GL journal. And then the transaction that it's going to book here, you can see it's going to debit my fixed asset and credit my vendor record. So it's automatically going to book the invoice for me. And then the next time I do a check run for my vendor, that asset is going to be there and available to be paid in the next payment journal. If you don't want to use or don't have a need to use classes or subclasses, that acquire button is not going to be available. It's not mandatory that you use those. So another option to put the acquisition cost to your fixed asset is by virtue of a purchase invoice. There's a couple ways you can approach using purchase invoices depending upon the size of the staff that you have in your office. If you get a purchase invoice for a fixed asset, if the fixed asset is already set up in the system and there's a small staff of people, if the same person manages your fixed asset and purchase invoices, then, or entering purchase invoices, they can set up the fixed asset and then enter that fixed asset information right on that purchase invoice. If you have a very large staff and fixed assets are not set up until a later date, what you might want to do here on the purchase invoice is have some sort of a holding account. And that holding account could be a balance sheet item that would be reconciled at the end of every period. And then instead of something going to the purchase invoice here and hitting the fixed asset subledger, it would just merely be a balance sheet item. And then what would happen then is then at the end of every period, in order to clear out that holding account, what a user might do, or your fixed asset, the person who manages the fixed asset, at the end of every period, they would maybe have a copy of all of the AP invoices that were paid that went into the holding account. And what they would do is set up the fixed asset, go into a fixed asset GL journal, and here they would enter probably the same transaction date or at least the same period that the fixed asset was entered to correspond with the AP invoice where it was booked in the general ledger. Select the fixed asset. By default, the depreciation book that's set up on the fixed asset would automatically come into the journal. Here you actually have to pick that this is an acquisition cost. This is going to be the description of your asset. Put in the amount that hits your holding account. And here you want to credit your holding account. So what would happen here is this would debit your fixed asset account on your balance sheet, and this would credit that holding account that you set up. So after your fixed asset is all set up, the next step is to calculate depreciation. So when you go on your fixed asset list, you'll see a task there to calculate depreciation. So again, here we're just dealing with the one depreciation book that posts to your general ledger. You would pick that depreciation book, pick the month-end date, put in some sort of a document number and a posting description of what you're calculating. And once you hit OK here, this task is automatically going to fill out and populate this journal. And here you'll see the debits to the, or here this is actually the credit to accumulated depreciation. And by virtue of that posting group that you assigned, it also knows what the debit entry or the depreciation expense account is. You'll see one line for each individual asset in your journal here. You can override these amounts if you want to. You just need to make sure that the debit and credit are also balanced. Another thing to note here is your calculate depreciation doesn't need to be run every single period. If you don't handle your financials that way, or your accountants don't want you to do it, maybe you just do it quarterly in order to streamline your closing process or whatnot. I just want to note that it's okay. The system can keep track of what needs to be calculated in any given period, whether you do it monthly, quarterly, or yearly. What the system does, it looks at the last transaction that was posted, what the book value is at that period in time, and then it looks how many periods there are between that last transaction and your current posting date that you're using to calculate your depreciation, and it multiplies out and does all the calculations for you. So if you only do it quarterly, for assets that were set up for that whole quarterly period, you'll get 3 months worth of depreciation. If you set up any new assets in between, it's going to calculate accordingly, whether it's 1, 2, or 3, the whole entire quarter. The last type of transaction that's very common are disposals. I'm just going to talk about a high-level disposal, the most common disposal entry that's done. I'm going to get into a little bit more detail on disposals if you sell assets next month, but your disposal entry is very, very basic. The most common one is fixed assets are lost or stolen or no longer used, have expired, fully depreciated, whatever the case may be. You know, the good examples are laptops or workstations that are in storage rooms or have been thrown away and no longer being used, furniture, chairs, desks, that, you know, if there are new build outs that take place and no one even knows where the fixed asset is anymore and it's fully depreciated, it is a very, very basic entry because your accountants or auditors usually like to see a clean list of fixed assets. If you don't have it anymore, you can't even find it, take it off your list. If you're not selling it for any money, and again, that happens to be the most common one for all the reasons that I just stated previously, you would put in the date that you wanted to dispose of, select the fixed asset that you want to take off of your list, and keep this amount zero. And that's all you need to fill in here. You also have to make sure that you fill in the fixed asset posting type of the disposal so that the system knows that it is a disposal. Like, again, this is the very most basic type of disposal transaction that's out there and the one that I see most often and the one that I get most questions about. And next month, we'll talk about fixed assets that might be partial disposals or sales. We're going to talk about it in a little bit more detail next month. Just leave this amount zero. And this entry, what it does, specifically if it's fully depreciated, it debits a fixed asset, credits your accumulated depreciation, and the fixed asset is completely taken off of your books. If it still has some value left, it will also post the respective gain or loss transaction. So let's go back into NAV at this point and take a look at a couple of more of these in a little bit more detail. I am going to go back into this fixed asset that I had already started my pickup truck because I have all of the relevant information that I need in here, my class code, subclass, my depreciation book, my posting group, and my depreciation start and end date are populated. So now my acquire button is available. So I'm going to kind of step through this wizard. And here we have a truck. I'm going to say this is a $40,000 truck. Here's my acquisition date. I am going to pick my vendor. This vendor probably might not be a relevant vendor, but I'm going to just pick any vendor. And this is my invoice number 98765, whatever it is. And tab through that. And then I get my next button. I want to open up my journal. I'm going to finish this. And here I'm going to debit my fixed asset, credit my vendor. I'm going to go ahead and post this entry. That was successfully posted. Boom. I now have a book value on my fixed asset. If I go in and look at my ledger entries, you can see here, it posted it as an acquisition cost. Now, like I said earlier, if you don't use your class code or subclass code, there's no need for it. That's quite all right. Let me open up, bring NAV back here. Another way to enter costs, acquisition costs on your fixed asset is simply by putting in a purchase invoice. And I am going to pull up the fixed asset that you want to book here. I'm actually going to use that same fixed asset because let's say I bought a trailer for it and I want it to depreciate both of them at the same time. I have one trailer and I am going to put it, I have no idea how much trailers cost, but I'm going to put an acquisition cost of $1,200 for that. Again, if you just want to show as an example, here is a fixed asset holding account. If you don't have the fixed assets set up, you might want to put the transaction here. And at the end of the month, use the journal. I'll talk about that in just a second again, but this is the same concept. You could either use the purchase invoice to put it to that holding account. For now, I'm just going to delete this. And I am going to post this trailer to the fixed asset. Oh, there is nothing to post because I need a invoice number here. And let me post this. There is nothing to post. How come I am not posting? Oh, because I need a quantity here. There we go. If you fill everything else out correctly, it posts. And now if I go back to my fixed asset, I should now see that my pickup truck, this is also a good way of showing you that you can have multiple acquisition costs, one particular asset. A good example of why you would need multiple acquisition costs is if you're doing a build out on a floor or a building that might take several months. You're buying carpeting, you're doing drywall, you're moving rooms around, you're buying artwork, whatever the case may be. You would put all of those different acquisition costs to one asset. And if you don't want to start depreciating something like that right away, you would put your fixed asset starting date way out into the future when you anticipate that build out work to be done. And then when you do your calculate depreciation, it's not going to start until it reaches this depreciation starting date. So in order to do a fixed asset journal, GL journal, if we were to have put it to the fixed asset holding account, you would just come into your fixed asset GL journal, go into default here. And here I just did it as an example. If we wanted to put something to a conference room, here we would just hit that one fixed asset, put in that holding account, and this would reclass it to the fixed asset out of that holding account. Just simply post it. And again, you can post as many acquisition costs as you need to one particular asset. The next type of entry, once all fixed assets are done, you've cleared out your holding account at the end of the period. I'm going to go back to my fixed asset list and go to calculate depreciation. I'm going to do this for January of this year, hit OK. There are 12 fixed assets that are depreciated. Do I want to open up my journal? Yes, this is kind of like a nice feature that they've added. It brings me right into my journal, and then you can see my list here of all of my depreciation costs. If you want to manually override them, you can do that here. You just need to make sure that each fixed asset balances at the end of each period, and it's a balancing entry, and then I can just go ahead and post that. And then if I go to my, let me see, go to one of my older fixed assets. Let's go to this one and go to my ledger entries here. You can see my most recent entry, and you can see that it just ticks away. My most recent entry will be up here. Now the disposal entry. So let's just go to this same, I'm gonna pretend we are disposing of this particular fixed asset. I'm just going to go to a fixed asset GL journal. And let me go 0228 19. I'm going to pick the fixed asset that I want to dispose of, put in that account number. Here we do need to pick a disposal transaction type, and I am just going to dispose of this. You don't need to put in any other information here. And then if I go back to that switchboard and look at the ledger entries here, you can see the respective accounts that it goes to. And if I navigate on it in the general ledger, it should show gain or loss because there was some value left on here. And it also decreased my asset account in the general ledger and my respective accumulated depreciation. So let's go back to my slide deck here. Now, the one fixed asset report that I usually like to introduce people to, because it's the most, I find it the most functional one and has the most information, it's called a book value report. It used to be called book value 01 in the menu, and I believe in older versions, that's what you would find is FA book value 01. The reason why I like this report is you can view it both in summary and in detail, and I think there's a lot of good information in both of those views. In summary, you can see here there is a total acquisition cost. If you use your fixed asset posting group or one of the other options, either the class or subclass code, it gives you options to summarize by any one of those values, and it's really good practice to pick one of those to use to tie to each one of the respective groupings in your chart of accounts so that you can get these summaries. And these numbers by category and total should all be able to tie out directly to your general ledger. So your acquisitions would be the actual fixed asset accounts. And then over here, you'll see the full depreciation or your accumulated depreciation. These numbers should always tie to your accumulated depreciation, then it gives you a running book value. Another thing that auditors or accountants like to see are disposals in a period. So if you run this for a full fiscal year, you can see all the additions, the disposals, and the respective depreciation and or accumulated depreciation that gets reversed by virtue of disposing. This same report also gives you the option to look at things in detail. So again, you can see these grand totals right down here on this highlighted line tie to this total here, and that should all tie to your general ledger. And then here you can see there was a disposal within the year of one of the vehicles. So where you would find that report, if I bring this back here, report, this is my book value report. This is where I'm looking at it for a full period. I'm just gonna, here are all the options that you can summarize and group things by. So this is why I recommend either your fixed asset posting group, the class, subclass, or location tied to each one of the respective fixed asset accounts that you have on the general ledger. The most common one that I usually use is the fixed asset posting group. So if you want to look at this and give this to your auditors, or look at this for one period to tie everything out, you can get a real quick preview. And here it is in summary form, like I had just showed you. And then if I look at the same exact report and I want to print it by detail, a lot of good information. This is something exactly what your auditors might see. What another piece of information is they usually like to see like the acquisition date. This has a lot of information on it. If you need the acquisition date, just be mindful of that. That's something that your NAV bar can help you with. Here's a couple of helpful tips. Again, like I said several different times, either use the fixed asset posting group, subclass, or class as a grouping method to tie to the subsidiary ledger to the general ledger. Another tip is if you have multiple staff people managing your fixed asset, consider setting up the separate journals for each user, and that setup is done in your depreciation books. That's all we have today for a high-level overview of fixed asset. Next month, we're going to be talking about setting up multiple depreciation books, tracking maintenance, using the cancel entries if you make mistakes. There's also a reclass entry if you make mistakes or you need to do partial disposals. And we're going to talk a little bit more if you're going to be selling fixed assets for money. Again, here's all of my contact information. Like I said, best way to get into contact with me is via email. Please find us on LinkedIn, Facebook, and Twitter. Leave any comments, hopefully good ones for us. We always love to hear from you, so please don't hesitate to reach out to us, whether it's on social media or me directly. At this point, I'd like to entertain any questions or comments, and while we're doing that, I'm going to go roll back to my contact slide so you can get my information if you have any further questions.